pleased to have on A Coleman Conversation Sherri Seiber and Shay Kleinschmidt from FranFund. Sherri, president of FranFund. Sherri, you've been doing this, you and your husband Jeff, since 2006. What is that?
Yes.
If my math is right, 20 years. Congratulations. What a great service you offer to the SBA lending industry.
Thank you. We're proud to fill a role in the industry that was not there before. So we really think we add value.
This is going to be a great conversation and what you offer to Main Street, and I love that. And Shay, I got to get this right. This just in, Executive Vice President of Business Development. What does an EVP of Business Development do for FranFund, Shay?
Well, we're sorting that out, but keeping us focused on our company objectives and making sure that we're profitable and driving revenue. And I'll still be in the lending world, not going anywhere. So that's a part of it too.
Let's start out with the FranFund 101. I'm going to ask Sherri that, and then we'll get into some other meaty topics. What does FranFund do, Sherri?
The easiest way to put that is from the client perspective. So we have focused on the franchise industry since the inception of FranFund. Right. There are candidates, aspiring entrepreneurs in the industry that have, perhaps they're on the smaller side, the perfect niche for SBA. So under $5 million opportunities, let's say from $150,000 to $5 million. And most of these people, are corporate refugees that left corporate America. They've never obtained a loan. They've never thought about a capitalization solution for whatever it is they're considering buying. Or it could we're getting millennials these days that are interested in business ownership. So we're basically hand-holding, we're counseling. We have put together, mostly Shay, have put together a portfolio of lenders that we refer our candidates to so that we can actually cover every geography and every market segment. We also do the rollover for business startup strategy. And when we have conversations with candidates, we're not only talking about an SBA loan or a rollover, we're talking to them about their entire capitalization opportunity. If it needs to be home equity or some other, unsecured, something like that. And we are providing support, comfort, facilitation, and we have relationships with the franchisors who refer people to us, with the franchise consultants who refer people to us, and then, of course, the precious lenders who are important to our success.
I love when you say you provide support and comfort. You mentioned corporate refugee. So I'm a retired exec and I want to do something. I want to be an entrepreneur. Why would I have this great idea and I'm going to go out by myself, maybe with my wife, my spouse. Why do I want to go the franchise route versus trying something on my own, Sherri? I know that's a hard question, so let me tee you up.
No, that is not a hard question. That is the question we live. That is how we live. The franchise industry is what I like to call the recipe for the French fries. Rather than going out and having to create the brand, the marketing, the accounting, all the things, the operational support, all the things that go into starting and sustaining and growing a business, franchising can make that easier. Don't anybody take away that business ownership is easy. It is not. You still have to get out of bed and work your butt off every day. But franchising is a capsule, right? So I buy this franchise, I get all the things that otherwise I would have had to go out and recreate myself. So if you follow the steps of a franchise system, they owe you success. If you follow the steps and you're not successful, you have recourse. If you don't follow the steps and you're not successful, the franchisor has recourse. So it's a beautiful thing. And by the way, the latest statistics on franchising is that $550 billion to the U.S. GDP in 2025.
Oh, it's amazing. I'm a corporate refugee, Shay, and I look you up. I used to say I'd come to your desk, but now I'm going to do it by Zoom. Walk me through that. I have some money in my 401k. I have an idea. Walk me through how you can help.
Yeah, so first we have a very high level overview conversation after getting some information about what their business plan is, some key information about their financials to provide a lay of the land of the funding solutions available to them. And then depending on which product they want to move forward with, or there may be both, such as a ROBS and an SBA loan combination, then they have more detailed calls with those experts on our team. And let's say that they choose an SBA loan, for example, but with a ROBS for the equity injection along with the SBA loan, which is compliant with the IRS.
Give me a ROBS. I'm sorry, I cut you off. Give me a ROBS 101, please.
Well, so basically people can access qualified retirement funds to invest in their own business, tax and penalty free, or they can use those funds towards a down payment on an SBA loan. So just like you may, invest in some kind of big company stock, you're doing the same thing, but instead you're investing in yourself and your success, and you have control over that. And so it's an amazing product, and it does pair very well with SBA.
No, I like what you said, investing in yourself. The naysayers say, well, you can't touch that retirement. Well, you're investing in yourself. You're choosing to put the money into the stock of your own company versus the Fortune 500. So I think that's very valuable. You mentioned we use this as equity. Tell me more about that.
Yes, so we help remove a lot of the friction from the process. And from a lender standpoint, I know that equity tracking or equity verification can be extremely tedious, and SBA takes a deep dive into that as well. And we just help with ROBS. We have those statements. We can provide all that documentation involved in that process for an SBA loan. And then we're also ensuring that they're compliant at the same time. But it essentially allows a borrower to access their retirement funds if liquidity is an issue because they don't have enough checking, savings, or other avenues for it. And so by being able to utilize ROBS, again, they're not taking a penalty hit on that, and they can then qualify for programs like the SBA.
Tell me a little bit more about that without getting too much in the weeds, but what do you mean without taking a penalty hit from the IRS?
So if you I'll let Sherri handle that. You have like the math down on it.
Go ahead, Sherri.
So first of all, for those listening, you may think that, you hear all the time, whatever you do, don't touch your 401k.
Right.
The message meant to convey with that statement is don't fund your lifestyle with your retirement funds, okay? But in 1974, the ERISA Act is when businesses moved away from offering pensions to offering a 401k, possibly a 401k profit sharing plan. It's simply a way to defer money from your paycheck into savings pre-tax. Okay, so sometimes companies have matching, sometimes they match profit sharing, et cetera, et cetera. Okay, so once you leave that company, you have, now it's basically 401k that's not supported by a company. Those funds can be rolled into, that's what the ROB stands for, Rollover for Business Startup. And by the way, the IRS is the one that coined that acronym. Thank you. The IRS and the Department of Labor are the two governing bodies of the rollover process. So when you decide you want to do the rollover process or the transaction, you essentially roll those funds into a new IRA that's supported by your new corporation that will be the entity you use to run your business. So the IRS allows you to invest those funds pre-tax. And what I mean by that is if you're under 55 and a half, you can access those funds penalty-free. The penalty is 10% if you access them before that age. In addition, you would pay ordinary income tax. So do some simple, this time of day math. If you have $100,000 in your 401k, and let's say you're in a 30% tax bracket, and you do this, you take a distribution, you end up with $70,000 minus the 10% penalty. That's what you walk away with. If you do this rollover transaction, you end up with all 100,000 able to invest in your business, and you're basically buying stock in your own company. So if you plan on getting up every day and working that business and growing that business, the value of that stock will increase over time. And hopefully you do a better job than a wealth manager would do and grow the value of that fund, so that when your franchise agreement runs out, or when you decide to sell the company, or whatever scenario comes around, then you've grown that value from, let's say, $1 a share to $2 a share, $5 a share, whatever it is, and you've done a better job than the wealth manager. And then how you take distributions after that point, personal choice.
Right, and then you're taxed further on down the road. Sherri, help me out. So I come to you. I loved your term support and comfort. Do you help me out in terms of picking a franchisor to work with?
Okay, no. Let me talk about the comfort part. When it's human nature, if you're considering business ownership, you're waking up in the middle of the night going, oh my God, what am I thinking? So in other words, there's a lot of fear. There's a lot of fear, buyer's remorse, what am I doing? Am I smart enough to do this, et cetera, et cetera. That is a process that happens during the potential entrepreneur's investigation of a business. And then once they decide to move forward, the fear goes 10x. We are not selling anything. You can't sell money to somebody that's not buying anything, right?
Right.
But if they engage us, we are just this little old company in between that's trying to facilitate their dream of business ownership. And so we are providing the support. Like Shay has a proprietary pre-qualification process that the lenders that we send deals to very much appreciate. And also the candidates that we use our pre-qualification for, they benefit because it's not just a rubber stamp. It actually means something, and we have great success getting those deals funded once it's done. And then we are facilitating their ROBs, and we are staying in communication with that candidate to reduce fear. You're moving forward. Everything's fine. We need this other form. We need that other form. Because left to their own devices, I think we can all agree that the stack of paper you generate with doing an SBA loan is about this high. And we need to keep that process moving forward to ultimate success and getting that business open.
Good for you. Shay, what is the current attitude toward lenders, toward franchise lending?
Lenders love franchising because,
tell me why.
Like Sherri spoke to earlier, I mean, it's a proven model of success if it's done right, especially an established franchise that has real, unit level profitability that they can prove, a very transparent FDD. So lenders definitely take a dive into the brand as well as the borrower, but franchising just helps give a better foundation of proof. Instead of a mom and pop, especially a startup, they haven't ever ran a restaurant, and it's not a concept that exists and has proven its success.
Yes, I agree with you. Absolutely. They can go back and look at the statistics of how previous loans have performed. They can look, there's a wealth of data in that FTD. What is that? The franchise, help me out, trade document. That,
the FTD, the franchise disclosure document.
Yeah. So I think that's great. And then what happens? You get the concept, you close the loan, and how are you involved with the company after that, or are you?
We are not.
We don't do any of the servicing or part of the disbursement. Once the loan's successfully closed, FranFund is out.
The only thing we would be involved with, if they engage us for a rollover for business startup, we provide the third-party administration required by the IRS and the Department of Labor.
That's where that was my leading question, which was poorly framed. So tell me about the administration.
Well, there are three primary roles that occur when somebody does the rollover for business startup transaction. One of them is the trustee of the business, which is basically the person or group that determines the investments of that 401k. And so if an individual is doing the rollover, they would therefore be the trustee, and hopefully they're making a prudent investment in a company they expect to be successful, which happens to be their own. The second role is plan administration. So that role is essentially, can also be the owner, but that's once their employees become eligible to participate in the 401k plan or the profit sharing plan, they have to keep a census of employees. And when they're eligible, hey, Bob, would you like to participate in the 401k plan? You can say yes or no. If you want to participate, you say what percentage of your paycheck you want to contribute to that. And that part's pre-tax and, so forth and so on. And then the third role is where FranFund comes in. The IRS is very interested in where your non-taxable dollars have gone. And so there has to be an annual tax filing called 5500, and third-party administrator, which FranFund plays that role, is the one that facilitates that.
So you help them with the little documentation the IRS requires after the fact.
Yes, absolutely.
Which actually is not that onerous for the small business owner.
It's not that onerous.
Yeah, it needs to be done, but it's not that bad.
The challenge that we face with the few thousand clients that we have is timeliness of providing the information needed to submit on time.
Yes, well, that is a common question. Tell me what some of the top franchise concepts you see in the market entering 2026.
Shay, you want that, or you want me to go?
From a franchise lender standpoint in the SBA, the appetite seems to be a lot in childcare and daycare. Also, home services are still really hot because they're, resistant to any economic downward trends.
Absolutely, yeah.
Pet industry is still really big. We do have a lot of lenders that really like the food industry, especially quick service restaurants. I'm trying to think what else. And then I would say that medical has been really big, and health and wellness. And depending on, how the brand is set up, and again, just going back through what I talked about earlier is unit level economics, transparent FDDs, strong operational support, responsible growth. Lenders are looking at all those things, but those are some other industries that are really attractive and on the rise right now. They're very popular in the franchise system.
Well, I know franchise lending is very popular in SBA. It's well above, this better than me, Shay, well over 30% of the SBA lending is into franchising. So you provide a great service for budding entrepreneurs. And the stats show, while I love mom and pop, franchise loans do perform better than startup mom and pops.
Well, we have one reason why we exist. Another reason is a brand new, a corporate refugee. I'll just continue using that example. Decides they remember how their father got loans in the old days. And by the way, those old days are really old. They would just go into their local bank and get a little small business loan. Guess what, folks? That doesn't happen. So banks are adverse. Well, they're not adverse. Banks want to know how the heck you're going to pay them back. That's their number one issue, period, paragraph. And so they're skeptical of first-time business owners. They're skeptical of franchise brands that don't have 25 units. They're skeptical about a lot of things. And so we have relationships with lenders where we can provide information to them that also provides help and comfort to them, perhaps sharing things we can't share with the candidate. But we can go to the lender and say, hey, look, this brand is willing to show you their balance sheet to show you that they can support the growth, et cetera, et cetera. Whereas if they walk into their local bank, they are not going to get past the lobby. And that's definitely not good for getting a loan.
Yeah, well, it's certainly important to have an advocate on your side and an expert on your side who can navigate the entrepreneur through these waters. There are a number of steps, but as you've said, you've done thousands of these types of transactions and have well positioned yourself in the industry to help Main Street entrepreneurs and working with the banks. Obviously, the bank, you're not around for 20 years. if you're not doing something right. So good for the two of you. And Sherri, congratulations on what you're doing. Shay, I'm a lender out there, and I'm fascinated by lenders want quality business. So I'm fascinated about what you're saying. How can I, as a lender, work with you, Shay?
Yeah, so we can assign a dedicated expert funding consultant who then becomes your designated point of contact, can keep you updated throughout the entire process, and they can also provide really helpful handouts that you can give to clients who are interested that help explain in very simple terms what the ROBS is. But that funding consultant will get on the phone, have a chat with them, and then keep you updated on their progress. At the end of the day, we're then helping you close more deals, and we're helping avoid those delays during underwriting and closing, because we will also help provide, if there is an SBA loan transaction also involved, all of that plan documentation, the entity formation documents, the trustee info, so anything else that is needed regarding the SOP to get the deal done. So help keep it streamlined and efficient. And then we also help verify that it is compliant, because as Sherri mentioned earlier, we have that third-party administration team.
Well, very good.
Let me add one thing, please. For lenders, having your candidate use a ROBS transaction to strengthen their equity injection is something that we have found very effective. Especially, it seems in the last 5 years, this has been a trend that we're seeing, a combination deal. So lenders, we would really love for you to send your potential candidates for that to us. And then also, you will no doubt, as a lender, run across situations where you cannot offer a loan, but perhaps the candidate could fund completely with the rollover transaction, and we'd like to see those as well.
Absolutely. Well, it's a great solution for a lender who that candidate may not fit exactly what their credit parameters are. And with your vast contacts, you're going to be able to find some. If there's a way to do the deal, you're going to be able to find a match. So good for the two of you. I'm going to let the two of you sum up. First of all, Shay, I'm fascinated by your shot. What's in the background there? What I freeway is that?
This is I-30 in Fort Worth, Texas.
You're in Fort Worth, Texas. Thank you. No, I always love to see the geography. Well, very good. So let's wrap up with geography. You're nationwide. How many lenders do you work with?
Over 100. So we have a very large lender portfolio. So if there is a lender out there that's listening and they can't place a deal, maybe it doesn't fit because they don't do startups or they don't like the franchise or the industry, then we do have a very large portfolio. So if you want to send it to us, then we can assist in placing it, and you can then turn that obstacle into an opportunity.
And absolutely. And Sherri, I want to pick up on what you said. You walk into a bank, and even though the bank is an SBA lender, every bank has their own niche and appetite of what they like. They like certain brands. They like geography. They all have their preferences on what they want to do. So it's nice when you approach the lender, you know what the lender wants, and it's nice for you to be an advocate for that entrepreneur, that budding entrepreneur, what they want to do. I've greatly enjoyed this conversation, Sherri. I mean, this is a great story for what you've done. And Shay, congratulations on your promotion. You guys do a great job for the industry. Thank you both for joining A Coleman Conversation.
Thank you very much.